Back to the charts with Big Boss Crypto, bringing you another market update and day trading analysis. And I hope you saw my last video and didn't fall for the Moonboys predicting 100k, a 1 million because of a small pump to the upside. They are all gone now because we are finally forming a retrace down and grabbing that liquidity to the downside that we spoke about last time. We do have some volume candles to the downside, and we do have the market maker structure in mind. So where are we? Let's find out. Okay, so the market maker structure, I'm gonna repeat it to you so you keep that in mind always when trading. This is how the market maker structure looks like. Always a double top before reversing. And it looks like we are currently, if I'm gonna draw it, we are currently in this zone right here. Let's take a closer look at how the charts have moved this week, because it's been forming the market maker structure as it does almost every week. We had our first leg up, first retrace down, second leg up, and then the third and final wave up, and that is where we formed our double top. And we are currently in our first leg down and possibly our first retrace. That is what we see right now. So don't expect new highs from this move, because it's gonna continue lower, because the market maker is gonna take some profits. We do have a volume candle here. Keep that in mind. It's a possible retrace to this zone up to 20.620k. But we do have some zones where the market maker has shown its presence. We do have some volume candles in the 19.800k zone. We do have them at 19.500, and we do have them at 19.3. So that is a target I'm looking at, because I'm gonna take some profits on my shorts. I started building them up in this zone when I spoke to you last time. I managed to get 2 orders filled. I do have 1 order which didn't get filled to the upside, but we reversed, and I'm currently in a short, and I'm gonna ride them out until we see Bitcoin move to this zone and possibly even lower. Newsflash. What happened yesterday was that we got some news from the Fed, and that was the GDP. We did have the unemployment claims, and basically it showed that the markets aren't slowing down in regards of inflation. People are still spending money. Unemployment claims is going down, which means more people are in jobs at the moment and getting some salaries, which they're gonna spend buying food and all that sort of stuff. So the news yesterday was good for currencies. We do have some news today also. We do have the core PC price index, which is going to dictate what the Fed might do the next week, if they're going to increase the rates or not. But that was basically what moved the market, and it was prepared for the market maker because they know the news beforehand, and they moved price up aggressively a couple of days before the news, and then now they're starting to move it down again. So keep that in mind. If we're going to take a look at the liquidation map on Bitcoin, we can see that we do still have that big liquidation cascade in this area below 19.7k. We do have a lot of money for the market maker to take to the downside. We do have a spike here at 18.9 even. So let's quickly take a look at Chainlink, our favorite altcoin. And as I said to you last time, you do want to look out for large wicks to the upside, because they form them, and that indicates a reversal most of the time. And it looks like we are reversing to the downside. I pointed out that we have some volume candles to the downside at 6.4 approximately. And the first zone that you do want to take some profits, as if you're managing risks differently than I am, but you could take a profit in this zone. I pointed out we did have volume candles in this zone from 6.99 and all the way down to 6.83, and it took it to the cent even. It's amazing. That's why I say volume candles indicates targets. They always get recovered to the upside or to the downside. All you have to keep in mind is the market maker structure and VIX in areas where we might form local tops. So that's it for Chainlink. If you do want to trade a retrace, trade up to 7.1 approximately, and then ride it down all the way down to 6.4, which is the closest volume candle area. So let's summarize this market update. And the first point is basically, where are all the Moonboys? They are disappeared. Because I saw on Twitter someone was talking about 100k for Bitcoin, 1 million. I even saw someone claiming that all the bears are, stupid basically, and that the bottom is in. I'm telling you, the bottom isn't in yet. We do have one more leg down for the S&P 500 and the Nasdaq. And it couldn't get nasty because, inflation isn't slowing down. We do have some stuff going on in the world. And basically we could see a recession sooner rather than later. So keep that in mind. The bullrun isn't in yet because macro is looking awful. And wait for, the Fed to start printing money again when the rates are going down. Basically follow this channel because we're gonna cover that in the future when that happens, because we're not in a recession forever. We will cover that later on because we believe it will come pretty soon, and the recession will get nasty this time. Also, if we're going to talk about Bitcoin, we do have money grab at 19.5k. The Moonboys haven't closed their longs. They're adding position. They're adding to their longs so they don't get liquidated. And the money tree grows at 19.5k, and that's where the market maker is going to liquidate a lot of people and grab a lot of money. And the third and final point is, I told you so. The market maker structure is always in place and the volume candles are always there. It took both me and my brother a while to figure this out, and that's why we started this channel. It's because it's a lot of Moonboys out there and a lot of people get trapped in their 100k Bitcoin to 100k. We never got to 100k in the last bull run, and that's because their technical analysis is based on Moonboy theories such as triangles, diamonds, patterns. Those don't actually work. The market maker sets them up as traps and reverses them down. Because when you saw the pump to the upside, people were talking about bullish flag in the last leg up. And it didn't happen. Price reversed and we have, we are below the bull flag right now. So be careful who you listen to. We're gonna get our points across, and it's not financial advice. It's all for educational and entertaining purposes only. And remember, you do have to form your own opinions. We are just trying to inform you. You can take some of our trading strategies to your own. You can disregard everything. It's all up to you. You have to form your own decisions. And that's what we will preach on this channel. That's it for today. I'm gonna give you another market update on Monday. Be careful, stay safe. Big Boss out.